My people, it's never a boring day in crypto. We got Ohm that just dropped 90%. Some call it the Luna 2.0. If y'all remember Luna from last bull run, that crashed the whole market and actually triggered the bear market. And that is what people are fearing right now. We got Trump with his trade wars, and the question is, did he really won against China? Like, what happened there, and why did he pause all tariffs, and what's to happen next? We got Fed hinting about us getting closer to a QE, so money printing is getting on again. But is that really happening? What needs to happen for the money printer to get on again? We're gonna look at the data, and as always, we can also look at the technical data and see where the market is going and what needs to happen for this bull run to get on. All right, so let's get into the charts. All right, so first and foremost, we're looking at the 10-year treasury note, and it's at 4.47. So it has increased a lot. It was down at 3.9 before this whole tariff situation, the last tariff situation where Trump bombed out those massive tariffs on different countries. We will dive into this in a moment. It went up from 3.9 to 4.47, and that is actually quite the opposite of the effect that Trump was out for. And in the same time, we had CPI readings last week. We had PPI readings saying that the inflation is going down. But what really happening is that true inflation is actually spiking, and we can see that here. It has gone up from about 2.22 and it sits today at 1.49. So something is causing the inflation to go up. Same thing there, not what Trump wants. The more the inflation goes up, the further we are from rate cuts. Fear and greed index sits at about 32. That is fear, and it has actually spiked up a lot. It was at 22 last week. I think it even was at 18. So it has gone up a lot, but I'm still calling a bull trap on this here. And I will explain in a minute why I still think this is a bull trap. But with that said, let's jump into the hot stuff and see what really happened to Ohm. Now the thing is, it's been a little bit shady around Ohm or Mantra for a while now. It started with airdrops not being delivered as promised. They came up with different excuses. The team holding 90% of the tokens, that is just like a massive warning sign in itself. Me personally, and I recommend the whole community, my whole community, never touch anything where the team holds more than, I would say, 20-30%. 35% if it's not on an aggressive vesting schedule. So with the community already being quite disappointed at Mantra, and with some FUD spreading about them, suspicions about against the team, they're not handling things correctly. When they made a transfer to an OKX wallet of 3.9 million Ohm from a wallet linked to Mantra, that is when the whole fear started. People started to fear a sell-off, and they were of course dumping off their positions to front run the dump that probably would come. And that just caused a major cascade effect. The whole thing just crashed, and within 1 hour it had dumped 90%, and 5.5 billions in dollars was sucked out of that market. So the price action was from $7 for 1 Ohm down to $0.5 for 1 Ohm. Now, what accelerated this and made this so aggressive was also that they deleted, after the community starting to freak out on the team, and the team not responding, or the founders not responding for 24 hours, were going totally inactive, silent. The community freaked out, and the Telegram channel was deleted. That is like, come on. And today the CEO of Mantra is actually blaming the central exchanges for this, and they say that this was a liquidation event, and a forced liquidation by central exchanges, and especially Binance. And Binance is always coming up as one of these shady exchanges that always is manipulating the price and doing some shady shit. And then we have the same thing here, a statement from Mantra that reads, "We want to assure you that Mantra is fundamentally strong. Today's activity was triggered by reckless liquidations, not anything to do with the project. One thing we want to be clear on, this was not our team. We are looking into it, and we'll share more details about what happened as soon as we can." We will see. Like, we don't want to point fingers, but everything is pointing that this was just a reckless team behavior, and basically they just rug pulled everybody for millions of dollars, actually billions of dollars. Goes to show that always do your due diligence before you invest into a token, and don't jump into tokens that influencers are recommending without you researching it yourself first. Because remember, influencers like me, like other people, get paid to promote tokens. Now, I actually don't get paid to promote any token at all. I only promote my own token, World. But most influencers out there get those offers. I know because I get the offers all the time if I don't feel very, very positive about a project and I really believe in that project. 95% of all influencers won't do that. So be careful with what tokens you jump into that is being recommended out there. Never buy your bias. All right. Always do your own due diligence. All right. So that is that about OM. Let's talk about Fed cutting rates. What is happening? So there's a lot of talk now. This rumor spreading that Fed is getting very close to QE. So QE means quantitative easing, and it basically means that they will flood the markets with liquidity by purchasing bonds from the markets. So basically amping up their balance sheet again. And that is just a complicated explanation of that they will start printing money. But the question is, how close to that are we actually? Now, here's the thing. Remember Trump's endgame plan. He needs to bring the 10-year Treasury bond yield down. And as we can see, it's still sitting at 4.46 basically, which is very high and much higher than he wants it to sit at. And with inflation also going up, he needs to basically crash the market to get this thing down. And what a lot of people understand is that there is a recession to come anyway. US and Europe is already technically in a recession. Like they can turn the numbers and tweak it and say whatever they want. We are already technically in a recession. Leaders won't, of course, never admit it because they don't want you to panic and start withdrawing investments and stuff like that, because that really it's a domino effect that just triggers that recession even more and accelerates it. So when the market comes down, what happens? People flee the stock markets and they jump into the bond markets. When the demand for US government bonds increases, then the treasury yield decreases, it goes down. But the mistake he's doing is that he thinks that he can go on with all methods in a new world. And he maybe forgot what happened when they sanctioned Russia and Russia's economy actually grew from it because they started to do business with other countries around. This is what's happening now with the tariffs. They imposing all these huge tariffs on countries is leading to these countries starting to do more business with each other instead of with the US. In the same time, what is happening? China hits back with massive tariffs. China withdraws billions and billions of investments from the US stock market, the commodity markets, real estate markets, and so on. They dump US government bonds on the market, which brings the yield up that we just spoke on. So this here is happening. And they do business with other countries instead of US, because what US don't understand, or don't seem to understand, is that China is not as dependent of US anymore as it used to be. Not only China, the world is not dependent of US anymore. Like, we can actually do businesses with each other. We don't need US to do business. Even if it's the biggest economy, the biggest wallet out there, but it's also a wallet that comes with a lot of consequences. There's a heavy price for doing business with US. It has to always be on their terms. And this is what a lot of countries don't like. So they are basically going around that now and doing business with each other, which I think is a good thing, because there should be a fair global trade and not one country dictating this whole trade. This is why I'm actually positive for BRICS. This is why I'm positive for other countries and regions creating fair trade deals. This is good for the economy. This boosts the economy, even though US and West always wants to say that it's the opposite, actually, that this is a threat to the economy. Don't believe that. Not true. The only threat to the economy is the globalism and the imperialism that West comes with. Luckily enough, there I'm on Trump's side, trying to stop that shit. But then again, he and his team want to take control over the situation, so they're just another team of globalists. So with all of that said, I'm not a macroeconomic expert, but I do understand economy and I do understand macroeconomy to a certain extent. And from what I see, how the situation is right now, it's like Fed is stuck between a rock and a hard place, right? Inflation is going up, economy is going down, unemployment is going up, the 10-year treasury note is going up. So they cut rates to boost the economy, to stimulate the economy. What happens with inflation? Skyrockets, all right? They let the fund rates stay where they are. or even increase them, all right, maybe they bring the inflation down, but now they're really crashing the economy. So what will they do? Sooner or later, they will have to cut rates. They are forced to do so with the way situations is looking right now. But like I said, they're stuck between a rock and a hard place. And I think they need to bring the treasury yield note down first, or Trump needs to do that. And for that to happen, economy needs to go down again. So I'm expecting another leg down for crypto, for the entire US stock market. But here's the thing, when that next leg happens, because here's the fantastic thing and the good news with all of this. When that next leg down happens, I think that BTC, I'm not talking about crypto in general, I'm talking about BTC. I think it will start decoupling from Nasdaq because it's moving similar to how Nasdaq is moving and how S&P 500 is moving. I think it will decouple and the indexes will continue down, continue to drop, while BTC will start gaining. Why I think so is because BTC lately has shown a lot of strength in these situations and has actually sometimes not even dropped as much as the indexes, which is very unusual. Normally BTC drops like twice as much as the indexes. Now it's the opposite. And trust me, hedge funds, institutions, big whales, they see this. And they, when they want a safe haven to store their asset at, they will definitely have BTC as an option. Gold is definitely a super option, but the problem with gold is it's not as liquid as BTC is. BTC is easily to convert to dollars, euros, or whatever it is. So back to it. I believe that the market will crash again. Now S&P will take much harder hit than Bitcoin will do. And that is when basically the renaissance of Bitcoin will come. It will start to run because, as we know already, and as I've mentioned several times, like it's already so super undervalued considering how much the demand for BTC is out there. I'm talking about governmental demand, central bank demand, institutional demand, super whale demand. More and more eyes are on BTC. So when that turn comes and that decoupling from the indexes come, best believe you're gonna see the greatest bull run there ever has been. Like it gonna fade the industrial bull run or the .com bull run or whatever it was. It's gonna be the sickest bull run you ever seen. It's gonna melt faces, and of course it's going to bring altcoins to run as well. We see that the M2 global liquidity is on a bull run, so it's just a matter of time, any week now, before this thing explodes. But like I said, first we need the other crash. And one thing that could trigger either a crash or a bull run is Jerome Powell having a speech on Wednesday, the 16th of April, 7:30 p.m. Central European Time, basically giving an economic outlook. So that will be very important, and it will signal a little bit what's to happen, and best believe that the market is going to react on it. So if you take a quick look at the technicals, then here's what I shared in the Telegram community. And if you ain't in it, you gotta join it. That's where all the alpha is being shared. I update all the time and share the trade ideas I'm in, signals. But anyways, this is the theory that I shared. And I believe that from where we are right now, we will be dumping anytime soon. We have formed a bearish pennant here, all right? Number one. And it looks like, actually, now looking at it, it looks like market wants to break out from it anytime soon. So what I think is we're going to have one last push up, mitigate this order block at about 86, 87, maybe all the way up to 88, 89 to take out all the liquidity resting here. But we cannot close a daily above this. If we close a daily above this, then we have created bullish market structure and we're going further up, all right? But I think that first we need to have that crash I'm talking about, and it will take out all the liquidity accumulated here from all the people that FOMO'd in now on this bull trap that I've been calling. And that drop is going to take us all the way down to somewhere between 67 to 74K. I'm calling 67K. That is basically the top of this major order block that we have here that is very strong. So I call it an XOB, an extreme order block. So all of this that you see here between 53 and all the way up to about 74K is an order block. You can consider this whole thing an order block. This is where all the accumulation happened that triggered this bull run that we had here. And that was in November when Trump got elected as president. But the real trigger was actually Fed announcing that they will cut rates, and they cut with 50 basis points. In that order block, you have one region that is extra strong and that really launched off the market, as you see here. And that is this order block between 65 and 68K. And it's not just candles I'm looking at. I'm actually looking at liquidity levels. And when you do that, you can see that there's a lot of liquidity trapped right here at about 67 to 69. So I want to see market come down there. And I can say this, if market comes down there, I'm throwing in everything I got on this, because even if we go a little bit lower, this will have BTC so underpriced, so undervalued, that it's just a matter of time before this will be these prices will be long gone history. So I won't be jumping in between different altcoins now and analyzing, because there's not much to say about altcoins right now. BTC needs to do its thing. We need to see BTC break out of this bullish pennant. Like I said, I think we're gonna have one more push up to about 86K, maybe 87, 88K. And then somewhere there, something will trigger that drop, and we will see market drop down hard. All right. With all of that said, I will keep you updated. Don't forget to like and subscribe if you got value out of this call. Don't forget our Telegram community. Link is in the description box below. And I'll see you at the top, because you know the bottom it's way too crowded. Peace.